You mentioned some of those geopolitical tensions. I think it's so important that you bring this up because through the course of this year, we are hearing more and more about the tariff risks, trade wars, even capital wars coming through in the market vernacular now. And just today, a case in point, we've seen these really consequential elections in Thailand and Japan. When you cast your mind to the geoeconomic outlook, the geopolitical concerns, what scenario worries you the most from a banking perspective right now?
I think, what worries me is the continued bifurcation and the weaponization of everything. The weaponization of trade, weaponization of capital flows, weaponization of, semiconductor and chips. I think we're all having to be used to pivoting very quickly, to be nimble, and to diversify. So the volatility is worrying, and that's why we said to everyone, just buckle up and stay diversified, right? So, you can't be too concentrated in anything because you never know. And if you're too concentrated, you will have the betas, and that could hurt. And so being diversified, both in your supply chains, in your demand markets, in your asset allocation, in your currency allocation, all that's important. Being nimble is important, so duration risk is something we look at a lot. Being cash flow focused, right? So you have to look at the cash flows of companies and stick to strong fundamentals, I'll say. So whilst the volatility does worry me, I will say it also offers opportunities for the traders. It offers opportunities in wealth management, etc. So, seize the opportunity when you can.
And Su Shan, before I let you go, you also stepped into the CEO role at a real turning point in places like rates and regulation, but also a turning point for global technology, right? DBS has always been front and center on the technology investment spend to try and maintain your competitiveness. I want your take on what's happening in AI right now and how you ultimately see that impacting your organization. How do you maintain the spend, or how do you prioritize the spend around AI right now, given the developments that we're seeing in this space, and what's the overall impact for DBS?
So I think, AI, especially the fact that knowledge is now ubiquitous, the advent of generative AI and agentic AI will change the way white-collar jobs are positioned going forward. And DBS as a future forward-looking bank. I mean, I think what I used to say was we have three modes. We have the digital mode, we have the data mode, and we have the process mode, the way we organize in horizontal working groups as opposed to vertical. But today, with the advent of an agentic world, I would say we have three different modes. We have the cultural mode, which is the fact that our people are nimble and agile and are willing to be upskilled and reskilled as their jobs change. The second mode we have is really the trust mode, right? I mean, we don't take this for granted, but being a trusted, safe bank is sacrosanct in the time of volatility and great change. You want your banking partner to be around, to be safe, to be trusted and dependable, and I think that is a massive mode. Of course, we still have that data mode. We will focus on cybersecurity and data lifecycle security of our customers, and that remains, very much inherent in everything we do. So, do I see AI changing the way the world works? Of course. Do I see it disrupting? Well, I see it more as capacity building. What used to take months or years to do now takes weeks to do. And that means you can release capacity for your people to do higher order jobs. So that means people have to be prepared to upskill and relearn, to stop doing all the mundane work that you don't like doing anyway, and to use AI. So, agents and machine and humans creating a partnership with strong guardrails around data security and cybersecurity and the use of data, etc., to create a lot more powerful, better experiences for your customers. I'm hopeful that done right, this is a real game changer, and we're all over it.